Hey everyone, I'm Roger Herring. I am the Investor's Accountant. Hey, welcome to my office and another edition of Ask Roger. It is a very rainy Monday, day after the Super Bowl here in Georgia, but I am ready to teach y'all something today. I hope y'all are ready to learn. Now, last week we did a segment. It was all about how many LLCs do I need, so we were talking LLC strategy. This week we're going to talk about trusts. All right, most of us have heard of them, but most of us don't understand how they work or the ins and outs of a trust. Now I'm going to go ahead and tell you, I'm a tax strategist. I'm not an attorney. I don't play one on TV. I didn't stay in a Holiday Inn Express last night or anything like that. So Roger, why are you talking about trusts? Because as a tax strategist, they come up all the time in the 22 years that I have been in private practice. So I know a lot about them, but today is for information and education. I am not giving you legal advice. All right, so how do they really work? You know, all the time at events, I've got people that come up and they'll ask me questions. They'll want to know, well, what if I start a trust, or what if I use this LLC? Sometimes I have people come up to me and say, I don't have to do any tax planning because I don't have to pay tax. Oh, really? Tell me more. Yeah, my attorney created this awesome uber wealth protecting tax killing magic trust, some giant name trust, and he tells me I'll never have to pay tax again. I shake their hand and smile. I wish them well, and as they're walking away, I'm just thinking, when an auditor gets a hold of you, the IRS is going to have a field day, because trusts most certainly do pay taxes in certain circumstances. Either that or you pay the tax. Somebody pays the tax. That's just the way it is. So today, what I want to do in this segment, The Truth About Trusts, is I want to talk about the three major types of trust. I want to talk a little bit about what they're used for, how they work, how they are taxed. We'll talk about whether or not they provide asset protection, because not all trusts do. When we're done with that, we'll talk a little bit about the land trust that most real estate investors are very familiar with, because there's a lot of systems out there being taught that center around a land trust. So I think you should know what it really is. And finally, we're going to wrap up. I'm going to teach you how to avoid illegal tax scams that are disguised as trusts. Are you ready to learn? I'm ready to teach. Let's go to the whiteboard.
All right, gang, here we go. There are three major types of trust. The first one is a revocable, and we often hear that as a RLT, a revocable living trust. The second is an irrevocable, and there are many different flavors of this. The third is a hybrid, and the hybrid contains elements of both the revocable and the irrevocable. So let's talk about the revocable. First, I think everybody and their brother needs to have a revocable living trust. Why? Its primary purpose is to avoid probate. Guys, I've been through probate. It's no fun. I am still trying to get the probate completed on my mother's estate. That's been over a year in the making. I think we're seeing light at the end of the tunnel. But if mom had had a trust, there would have been no probate. Wills are probated, trusts are not. Now, the revocable living trust is just that. You can change it, you can cancel it, you can do whatever you want to during your lifetime. Now, you pass away, and that revocable trust becomes irrevocable, and your wishes, your control from the grave takes over and allocates your assets the way that you wanted them to do. Now, some people go ahead and they distribute the assets out. Those with significant assets, let's say a rental portfolio, might change this to an irrevocable trust and operate the rentals inside the trust for the benefits of their heirs, the beneficiaries. Now, with a revocable living trust, this is what we call a grantor trust. Now, the grantor is the person that creates the trust, and he is the one that grants the assets to the trust. So what we're doing is we retitle assets to be owned by the trust. Your primary residence, your rental properties, your corporate stock, all of these type of things. And what should you know, as a grantor trust, this trust has pass-through taxation. The IRS sees the revocable living trust as a disregarded entity. So everything flows through, and any income is recognized on the grantor's tax return. Now, when the grantor passes away, there is a step up in basis. So when I inherited my mother's property, the law says I get a step up in basis to the current fair market value. Her condo she had bought, let's just say it was for 100 and now was worth 500. Instead of my basis being 100, it gets stepped up to 500 the day she passes. Okay? Those are the features of the revocable. Now let's talk about irrevocable. The first thing you should know about irrevocable is that the assets are protected. There is no asset protection over here in the revocable. Irrevocable assets are protected. Now, it is a separate tax entity. What does that mean? Any income, I can't spell today, entity, there we go. Any income earned in the irrevocable trust has to either be passed through to the beneficiaries and the beneficiaries pay tax, or tax has to be paid at the trust rates by the trust. And unfortunately, the 37% top tax rate starts at about $14,000. Yeah, a married filing joint couple, that's more like 500 and some change. Okay, I'm just going off memory. That's definitely off the top of my head. But here's my point. You pay a lot more, a lot sooner when it's inside the trust. Now, irrevocable is just that. That means you cannot change it. And you are not a grantor with this type of irrevocable trust. Okay, you are donating assets, not granting. You are donating. And when you donate, there is this thing called gift tax. So if your donation is above the annual gifting limit, which I believe for this year is $18,000, then you have to file a gift tax return and use your lifetime exemption, which I believe is currently $13.7 million. Okay, there can be gift tax issues, and if you don't file that gift tax return, there could be problems. Finally, there's a hybrid, and the hybrid contains elements of both, such as it's a grantor trust. Oh. Excuse me while I get my pen back. It can be a grantor trust, meaning it gets passed through taxation. It gets a step up in basis. The irrevocable has no step up in basis. However, it does have asset protection. So it's getting the best of both worlds, and different hybrid trusts can be structured for different things. You know, estate planners have been using these things for a long, long time, not primarily to avoid taxes, but to manage estates. Now, why would you want to use an irrevocable trust? Control from the grave. One of my favorite reasons to use this irrevocable trust is when you need a special needs trust and you need to care for a special needs child, or you're looking at generational wealth and you have some children that aren't exactly responsible and didn't learn the family business, but you want to make sure that they are taken care of. Well, they can't get to the assets with an irrevocable. The trustee controls the assets, but they can benefit from the income. So this is how you reach up from the grave and control the future. All right. Now, what is a land trust? There's a lot of confusion about it, but I'm going to tell you this, guys, it's real simple. A land trust is nothing more than a revocable living trust. That's all it is. There is no asset protection in a land trust. None. Despite what people may tell you, there's no asset protection. The only type of protection is anonymity. Okay. And what do we use it for? We use it as a transfer vehicle. We use it to keep our name off the title. There's all kinds of appropriate uses, but understand what it is. It is a revocable living trust. That's the bottom line. That's the truth on trust. Let's go away from the whiteboard and wrap up.
Okay, guys, I want to wrap up today by teaching you how to recognize and avoid an illegal tax scam that is disguised as a trust. Now, every now and again, I'll have a client that says, hey, can you look at this and tell me if it's legit? And I will. And you know what? The first thing, the sniff test. Does it sound too good to be true? Are they making promises that are absolutely impossible? Now, let me tell you, there are some entities out there that can totally kill tax, but they're usually not trusts. Okay? So the first thing I'm going to look at is, does everything seem right? Now, this may seem strange, but how crazy is the name? If the name is about that long and you have to look it up every single time, you can't remember what it is, it sounds like something somebody has concocted and they've really got no basis to stand on. Here's the third thing. If their marketing material cites all these different laws inside of federal law, state law, the Internal Revenue Code, and it's worded in a language that you as an average person cannot understand, something's not right. Something's definitely not right if they make the statement, well, most attorneys and CPAs just don't get it, so you're really wasting your time if you show it to them. Oh, them telling you to cut your trusted primary advisors out of the loop, that is a big hint something is wrong. Okay? The last thing I want you to watch for, okay? The last thing. If they're telling you that the IRS audited it, but the IRS is wrong and it's under appeal because of A, B, C, D, E, F, and G, something's not right. Run far, run fast. Not long ago, I had a client bring one of these things to me. I took a look at it and I said, well, a lot of times I see things like this and I don't believe it. Now, the claims they're making are intriguing. Have you run it by your attorney? Well, no, I guess we should do that. Yeah, you should, because I will go and look up the code sections, but I don't have a whole lot of confidence in this. The attorney came back and he was very blunt. This is an illegal tax scam. In fact, we helped facilitate prosecution of a similar one 3 months ago. There you have it, guys. That's the truth on trust. Until the next time, Roger out.